Hey, morning, folks. Hope everyone's doing all right. Happy hump day. So the basically the creme de la creme of this week's events, the FOMC rate announcement. So in terms of, I'll get to some price action in a little bit, but pretty much continue on from yesterday. We saw, obviously, I mentioned yesterday 106 as being that floor, and this is the markets are pretty much about 78 points, so about 78% priced in a 75 basis point hike. For this market to push further, we would potentially need that 100 basis point hike, which, was rumored to come through after, Canada uh, did exactly that, just surprise markets with a 100 basis point hike. And also last week, if you guys remember, we had the ECB as well. So the initial guidance was 25 basis points, and then they came out and put out 50. So I don't know about you guys, but there seems to be a trend there. So right now, the Fed has said, okay, 75 basis point is potentially that's how much they will be uh, raising rates this time. I do feel, however, 75 basis point, if they do come out with just that, it might slight be not a disappointment, but more you might see markets kind of because we're gearing up, and that's kind of got used to the fact that they come out with these outrageous numbers. Right, early on, 75 basis points wasn't in the car. I mean, they said if push comes to shove, they don't mind 75 basis points. It's in the toolbox, but they didn't seem to be leaning too much into that. And then the Fed speakers start to come out saying, just put in bits and pieces, rumors. So every rumor has now, for some reason, have come true in a way. So I would think that is the Fed trying to communicate to the market, basically prepping people that there might be this and that. So let's see. So I have a feeling there's some basically expectation that 78.7% on 75 basis point. If we do get 50, however, that will definitely disappoint this markets, and we will see the Dixie just slipped. Sorry, not slipped, slip. Probably retest of the 103s before anything else. All right, so equities traded relatively positive, holding on to um, basically prior levels of inflection that we were sort of monitoring for a couple, about 2, 3 weeks now. This was led by big tech. So mind you, the numbers weren't great for Microsoft and Alphabet, but they were optimistic. Them, being these giant behemoths of companies, them saying, okay, even if the economy slows down, we can handle it. So that, spurred markets to basically not freak out and sell everything. Um, Other than that, so next thing is crude. I won't say positive, but we are holding on above $95. And this the API numbers overnight came in, basically pointing to a drying up of US stockpiles, and we will get the DOE numbers later today, so that remains to be a question. And I would think a point to keep watch for crude trade is it might not have extreme right there and then effects, but it does sort of add on to the entire picture. We have talks, rumors of demand destruction, the supply tightness, that's that whole I don't know, spare capacity chat and all these things. But so that will just fit into that entire narrative really, and then impending recession, yada yada yada. So 100 basis point hike from the Fed would pretty much cement this. The freaking out of the recession just became a further freaking out of an impending global recession, because China equities as well didn't do really well today. They did yesterday because the PBOC remained accommodative, said they will continue to be accommodative, but not seeing it translate too much into Chinese equities today. Um, so this happened on on nat gas, and why is because basically with the whole Ukraine Russia said with the whole Ukrainian situation going on, they will keep supply to Europe at a minimal. It's like we are not playing ball with you. In a way, like if someone tells you, if you have a feeling like, okay, someone doesn't like you and they might not want to be friends with you, so you preempt that and then say, oh, cool. Yeah, I don't know if I want to be friends with you either. Like before waiting for that to happen. It's like, no, you need me more than I need you, kind of thing. Even though it sucks for me, like it does suck because petroleum and nat gas exports make up a huge portion of Russian GDP. That is it from me today. I don't want to yammer so much. Again, these technicals I was looking at, pretty much holding on for the day. Um, this is me. This is sorry. This is Reed, bringing you the daily briefing. Remember to subscribe, bell icon, and like the video if this was helpful. Any questions at all, hit me up in the comments, and I will see you in the Discord room. Thank you very much, and have a great session ahead.